I think the stuff that I started buying in 2024, early 2024, is up between 3 and 5x in ETH terms, and then ETH is up another, you know, whatever X, depending where you bought the NFT. So they become this massive multiplier trade. And
But
people were like
now,
NFTs because everyone got burnt in stupid shit NFTs last time. But
right.
really, there was signal in all of that. That was my point. Signal was there's some real stuff that's going to have staying power that didn't lose a lot of value. And then there's a whole bunch of others. There's as we've talked about, the Rekt guy, the MFers. There's a bunch of these kind of larger collections before you start getting into the art stuff, which is a bit more difficult. But I think people just need some exposure to this, because if wealth gets recycled and ETH goes to all-time highs, this stuff is going to all outperform.
Today's markets aren't influenced by news stories or earnings reports as much as they are by the continued debasement of currency, which makes all assets less valuable. Raoul Pal, author of The Everything Code and former hedge fund manager, says that the only way to keep and grow wealth is to hold assets that grow faster than this loss. His data shows that liquidity and debasement cycles account for almost all of crypto's and the NASDAQ's success. This means that over time, tech stocks and digital assets are the only real winners. S&P 500 barely keeps up, gold falls behind, and most other investments do worse. So long-term winners in crypto are driven by adoption, liquidity, and strong network effects. Ultra-scarce digital assets add another level of resilience. Pal's message is clear. If you don't follow the liquidity cycle, you could miss the hottest chance to get rich right now.
Yeah, so look, I've never had an issue with ETH, and yes, it underperforms over periods in time, but it was like, this is the core foundation stone of Web3 is ETH, and everything else kind of builds around it, Bitcoin being a separate beast. So what I had done is, we've talked about this before, the second cycle trade where somebody's got Lindy effect and you buy it, which was Solana at the low in 22, is usually the best trade of all because it's kind of been de-risked. And then people have the light bulb moment, which they're having again with ETH, right? But ETH has gone through that Lindy effect in the past. This was happening to NFTs. And I talked about this for a while. Nobody understood what the fuck I was talking about. And I'm like, this stuff is survived the Lindy effects. There's a group of collectors who passionately care about Xcopy, Beeple, whoever it may be, Sam Spratt, all of this stuff. And that this stuff is likely over time, as the wealth in this space, I think it goes from $3 trillion to $100 trillion over the next 8 years. That'll be the largest accumulation of wealth in history. And wealth always flows upstream, and art is the top of the pile. Even if you go to an art collecting billionaire, they might have 5 houses. After that's hard to manage. But in those houses, they have 10 times the value of the house in art itself. Right. So it has always been a proven store of value. And so what we're seeing is, as ETH goes higher, the prices don't adjust down, which is what people thought happens. What actually happens is wealth creates demand for this stuff. So this stuff is ripping. And I think the stuff that I started buying in 2024, early 2024, is up between 3 and 5x in ETH terms. And then ETH is up another, whatever X, depending where you bought the NFT. So they become this massive multiplier trade. And people were like NFTs because everyone got burnt in stupid shit NFTs last time. But really, there was signal in all of that. That was my point. Signal was there's some real stuff that's going to have staying power that didn't lose a lot of value. And the moment people started realizing, if I think about when I bought Giga Chad, the Beeple, I think I paid like 9 or 10 ETH for it. And now they're trading at 40 or 50. And ETH has gone up 3x since then. I mean, Christ. I mean, that was a trade. But look, the chart I'm showing now is the chart of punks, which best represents the space in dollars. And now I've actually got a longer term version somewhere. Actually, I've got it here. In fact, I'm going to share that as well.
I never knew that you could find CryptoPunk price on TradingView until today.
And at GMI, we built a whole model around it. It was in RV Pro Macro as well. A whole model about how to value this stuff, how liquidity drives it, how it fits into the business cycle, the whole macro overlay. So here is this chart, as you've never seen from anybody. this is the punks chart long term in dollars. I mean, you'd be buying that all day, right? I mean, look at this chart that I'm sharing now. This is punks in ETH. Now, from last year, when was that? August 24, when we had that correction that started the banana zone. These things have outperformed 3 to 4x ETH. And ETH was down and ETH is 3x from there. So it has been the trade, really, of the cycle. It might have even outperformed SUI and stuff now. I'm not even sure. But, you know, people were saying, well, do punks and Bitcoin trade 1 for 1? But punks are so scarce, really. And considering a bunch of these are locked up in DAOs and, you know, Yuga have a bunch, Mickey Malka has a bunch, there's very few to be able to buy. And if you want them, it's available and good. You're going to pay up for it. Well, I mean, people keep asking me how do I approach it? And that's actually a harder question. You know, and obviously if you've got a lot of money, buy a punk. If you're somewhere in the middle, buy a grifter. And if you don't have that much, buy a dick butt. And then there's a whole bunch of others. There's as we've talked about, the Rekt guy, the MFers. There's a bunch of these kind of larger collections before you start getting into the art stuff, which is a bit more difficult. But I think people just need some exposure to this, because if wealth gets recycled and ETH goes to all-time highs, this stuff is going to all outperform.
I don't know if this is topics or not, though.
For me, it's the art thing that I'm more focused on than anything. And the reason being is, as Punk 6529 talked about, and I've written about, these are the apex of all tokens. They're the scarcest, most valuable tokens that will ever exist. People don't understand this yet. This is Fifth Avenue, Central Park real estate. This is Mayfair. You know, this is unbuyable stuff. In a world where these economies become vibrant, this is apex tokens, block space, the apex of all. Like these as a trading vehicle, you can trade some of this stuff. It's liquid enough, these larger collections, to just about do stuff. But really, this is just by acquiring and holding the most scarce block space of all. That's the game. And it's not, you know, for the next 6 months or, you know, 12 months. That game, I think, is too hard, because, you know, good luck, as you said, trying to get rid of, you know, 5 1-of-1s by X copy in a bear market. I mean, there's no way, because nobody's got the money to pay for it. Yeah, I do. I've said this for a long time. I mean, as you know, my main bet has been SUI for a while, and before that was Solana. Those rotations have done well. SUI still generally outperforming Solana over a longer term basis. I think the next phase of Bitcoin dominance, we're seeing the ETH rotation trade. That's good. The catch up is happening. Okay, once it gets into kind of mid value versus Bitcoin again, then I think we'll see the rest of the space utterly ignite. And as we know, once you throw in a lot of liquidity into lower free float things, they go up more. And that's how it always plays out. And that's where we are in the cycle. Now, one of the things on the macro side that we look at is the influence of the business cycle on that particular trade. And it's the same trade you and I have grown up with in markets, is earnings have to go up for people to go further out the risk curve. So when the ISM picks up properly, the business cycle picks up, corporates and people earn more. And what we find is, you know, in the bond market, it goes out to junk, then out to emerging market junk, and then out to private credit. We see small caps outperforming big caps in equity markets. We see all of this, and it's the same with the altcoins. The issue is everybody thinks their altcoin should go up. That's the issue. Is it's like everyone's like, well, mine hasn't gone up, so therefore this is all wrong. It's like you need to have the right altcoins, and I think people mid-curve it. They get so involved in the value benefits of their particular token, when really there's one simple thing: is go onto CoinGecko or CoinMarketCap and look at crypto. And we've talked about this. It's like, I'm sorry, but people are going to buy XRP and Doge and Cardano, whether you like it or not, because they're cheap. In the absolute term of, you know, how much you pay for a token. So people will do that. The alt layer ones that are getting absolute network adoption, Solana, SUI, few others, great. And then somewhere in the middle, we'll see what happens. But I think the middle part is the harder play. Hey, I've got this DeFi token that could be amazing. That's pretty hard. There's some idiot-proof ones, which is big layer ones that get adoption, go up a lot, and they're less risky. And the moron trade, which is always a good one, which is just buy the cheapest thing on the top 10.
Pal's view on this cycle comes straight from his everything code theory. Thinks that Ethereum, high adoption layer 1 south, like Solana and Sui, and finally, cheaper speculative tokens that attract retail money will slowly take the lead from Bitcoin. This isn't a coincidence. It follows the normal risk curve, where money flows into safer assets first, and then into riskier, higher beta plays. Pal says that the idiot-proof trade in crypto is to hold on to major layer 1 south that are clearly being adopted. A riskier approach is to go after the top 10 cheapest coins when retail inflows are at their highest. Because they are linked to how people act and the flow of money, these patterns keep happening. But his main point is more than just coins. He also says that very rare NFTs like CryptoPunks and digital art are going through the roof. Since his GMI call, CryptoPunks has gone up over 100% and is even doing better than ETH. For Pal, these assets are beginning to act like fine art. They are going up in value in both crypto and cash. They could become some of the most valuable digital assets of the next 10 years.
Well, look at it. In fact, I'm going to show you the moron trade now. And I'm not saying that these are moronic and people are moronic for owning them. I'm talking about when retail come in, what do they look at? Hold on. What do I get? Okay, I'm just going to share this. Okay, so you're new to crypto. Welcome to crypto. Oh my God, Bitcoin, I can't buy that. It's $116,000. I can barely afford lunch. Ethereum, well, that's pretty expensive. Oh, but XRP, I've heard about that. I saw some videos on YouTube. It's $3. BNB, well, I don't really know what that one is. Solana, $175. Oh, but Doge, Elon likes Doge. It's 22 cents. And Cardano, I've seen tons of videos. It's 78 cents. You can see what happens because we've all done it too. So that's my general thesis, that the anchoring bias of price is a real thing. And look at the top 10 because you think you've de-risked it. Yeah, so when you speak to friends now, some people got bored in crypto over that period of sideways consolidation. They're all punting options on tech stocks. Right, so the speculative fervor and the confidence that I can make money in this because everything's trending because of the debasement and everything else, and we've got some mega narratives like AI, makes it pretty easy game to make money in, and you're starting to see it sucking more and more people in. What's very interesting is, I've had this everything code thesis for quite a while now, but generally speaking, the crypto space has understood debasement of currency versus inflation, which is what TradFi thought of. And we've been on this trade saying they need to refinance the debt. That's the whole everything code thesis. And here is Scott Bessent coming out saying publicly, we need stablecoins to refi the debt. Trump saying we need the Fed to cut rates because we need to refi the debt. The whole game is now open. They're telling you what the game is. And there's still a lot of TradFi people who don't want to understand it because debasement's not a thing that was taught at university. Well, so very simply, what beats the debasement? Debasement's about 8% plus a bit of inflation, whatever. So call it 10, 11%, 12%. Well, the S&P does that. So that doesn't help. Gold does a little bit less, so that doesn't help. So you've only got actually two assets in the world that outperform the debasement of currency. One is technology stocks and one is crypto. When you divide the NASDAQ by Bitcoin, it's down 99.997%. So it's like, okay. Then when you put the correlations of the long-term drivers of the asset prices, 97.5% of the NASDAQ is explained by debasement, liquidity, and 90% of crypto. So you've got the largest dominant factor in the history of macro markets over the longest persistent period of time since 2008. So you basically only need to care about one thing, that. And the other side is how fast is it being adopted, which is why it outperforms the debasement. So in which case you've got only one macro factor that matters, which is why I keep saying to everybody it's all noise. Whatever it is, fucking Israel, China, nobody cares. Nobody cares because it's 90% of all price movement is explained by one factor. And then so just
you must
if
get
that's
really
the case,
bored
just buy
going
one
on these-
asset.
And
And
I
this
think
is weird to me,
everyone-
right? I was never that guy. I was like, the diversify, we need a bit of this,
Of
and
course.
on some emerging market call options. And it's like, none of it fucking matters. If it's crypto, then all you need to do is look at what is the strongest performing chart, let's say on a weekly basis. And that happens to be SUI. So I just own that. But you could just own Bitcoin, or you could probably just own ETH, or you could own Solana, and you'll be fine.
That's what I think I would say.
Well, once you own one asset, so you don't have to watch this whole basket of shit. And we've all run portfolios, and before you know it, you've got 10 positions that are losing money because you don't focus on them. So it's like, get rid of all of that noise. Then look what Bitcoiners did. The early adopters did nothing, and they compounded more wealth than anybody else in the shortest period of time, pretty much, apart from a few startup founders. So the signal's there, and then if it is one factor, then all you need to worry about is liquidity. That's it. I know Bitwise is doing this, and those guys are great.
Right.
Yeah, it makes total sense. It makes total sense. It still feels like the market, if I look at the top 20, it still feels like it's not mature enough, really. So you've kind of got some weird stuff in there. But generally speaking, should work fine. The issue is Bitcoin's a bit too large percentage. It should just drop out of the index. It should be fine.
Yeah. So maybe, but I'd still want to keep it just very like the top because I agree it's not mature enough as a product. I feel No,
I'd probably take top 10. I think that's fine for now.
Keep some Doge.
You got the issue. Yeah, you got the issue of Bitcoin being a bit large, like. MSCI World used to have this massive weighting of Japan, and everyone had to produce an ex-Japan version of it. So do you have an ex-Bitcoin version? So you can buy Bitcoin via an ETF and then have everything else ex-Bitcoin? And
yeah, that's an interesting one.
Because Bitcoin is a different beast, right? It's a network adoption model of a new collateral asset. Let's call it that. Well, the rest is really a technology that's being used for other stuff.
Asterisk for Pal. NFTs like CryptoPunks, rare digital art, and other very limited collections are the apex tokens of Web3. They are like Fifth Avenue real estate in the blockchain age. They are very valuable because they are very hard to find, have cultural significance, and are at the very top of the wealth pyramid. This is similar to how billionaires finally put their money into fine art. Pal thinks that the demand for crypto assets will go through the roof, because crypto wealth could grow from $3 trillion to $100 trillion in the next 10 years. Early data confirms this. Blue chip NFT collections have made it through terrible downturns and kept their loyal holders. They are now doing better than major cryptocurrencies, often going up in both ETH and fiat terms. This resilience is similar to how fine art acts in traditional markets, but with the added boost of global access and liquidity driven by blockchain. Connect everything to his everything code. Pal says that we are now in the banana zone, which is the stage where availability, acceptance, and willingness to take risks all work together to create huge wins. Since August 2024, SUI is up 650%, XRP 630%, Doge 210%, Bitcoin 140%, ETH 105%, and Solana 51%. This shows that he is right. The main thing he learned is that the banana zone is already here if you've been keeping the right assets. Pal's advice is always the same. Follow the code, not break it. This is true for large-cap crypto altcoins that are driven by adoption and apex NFTs.